With mine closures happening around the world, is this the biggest blow that the sector has ever seen? Joining me today is my very special guest, Pierre Lassonde. He is the chairman for Franco Nevada, but so much more than that, really probably one of the most prominent and respected voices in our sector. As always, it's an honor to have him on. Pierre, welcome back. So nice to see you.
Thank you very much, Daniela. It's always a pleasure to come on your show.
Thank you. Well, I'm sure a lot of our viewers will appreciate getting your thoughts, Pierre, on what's really impacting the mining industry here. I mean, who would have ever foreseen the day where we're going to have mine closures around the world? How are you handling this?
The mine closures are more than likely, they are very temporary. They're going to go from 2 weeks to a month. And I don't think you're going to see much more than that. And for the very large operations, they can probably push their mill and make most of it up. So in terms of, total revenue, it's not going to have as much impact, for example, in the copper business as the copper price itself. That's where the impact is really felt. Because copper went from $2.50 to almost $3 to like $2.10 to $2. Right. And so many of the producers have cash costs like right around the $2. Some of them are already announcing that they're shutting down for 3 months or 6 months. Like Glencore this morning announced they're shutting down their Tanzanian operation, their Zambian operations exactly for that reason. That's where the impact is, I think, the biggest, Daniela.
Interesting. So more so on the base metals than the precious metals?
Absolutely. On the precious metal, the price has never been better for the miners. I believe that the second quarter reports by most of the gold miners will be blowout quarters. They're going to really show what this industry can do with $1,600 prices. And the consequences of the shutdown for the larger mines, they're very likely to be able to make it up over the next 9 months. That you can just push the mill a little harder and you've got the equipment to do that. Where the producers are not going to be able to make it up are the ones who are underground miners that don't have the stockpile in front of them. And those will be, but again, most of them, it's going to be 2 weeks to 3 weeks, some of them a month, but not a whole lot more than that. But overall, I still believe they're going to report, best revenue and profit,
really?
Probably. Oh, yeah. Yeah.
Okay.
And also, don't forget, 25% of the costs of mining is related to energy. And with oil at $25 a barrel, it's like you just got a 10% cut in your operating cost. Right. So if you were a $600 operating cost, now you're $540.
Absolutely, Pierre. But what about mine financing? We basically saw it fall away in March and April, specifically in North America. So what are you seeing on the financing front, and what does this mean for, even if the Newmonts and the Barricks are in good shape, what does this mean for the mid-tiers and the juniors?
Well, what we've seen, for example, in the last 2 weeks, we have seen two mergers. One between Argonaut and Alio, which are like mid-size, companies. And then we've seen Endeavour taking over what's the other company in West Africa, Semafo. So what you're seeing is that the gold business is doing well. It's thriving. The mergers are alive and well. We're going to see, I believe, a lot more of it over the next 6 months. And but on the finance, and interestingly enough, on the Endeavour Semafo, the main shareholders of Endeavour came in with $100 million financing. Last week, we saw, for example, Orla came in with a $75 million financing, and the major shareholders, including Newmont and Agnico Eagle, and in that case, myself, we all put up our pro rata and did a $75 million financing for Orla. So in very specific cases, the financing is available. But for the vast majority of a small, medium-sized company, there's no financing available. The market is still not there.
Not there. What's it going to
No.
take to get the market back? Well, obviously, we need all this to pass.
Well, I think that you're going to need to have probably, I thought that at $1,600 gold, to be very honest, that you would appeal to, people's greed kind of thing, and you have risk on again, that people would come and risk capital would be available. It's not there yet. I think that but when you look at the gold ETF, for example, we've seen over 300 tons of gold being purchased in just the GLD this year alone. So there's a lot of money going into the gold bullion. I think we're starting to see money going into the gold funds. It's a trickle at this point, but my sense is that sometime between now and September, the fall, I would say, we're going to see a lot more money coming in, and that's when the financing will start to be available for juniors.
Right. And on the gold front, the demand, I see the coin sales, it's through the roof. You can't even get, gold and silver coins right now from a lot of bullion dealers without paying an extreme premium. And we just wrapped the first quarter, and gold was still one of the best performing assets. But the gold miners are lagging greatly behind physical gold. When does the catch up happen?
Well, I think the answer to that is when you see money starting to flow into the gold funds. That will be the first sign that the risk-on approach is back on. And as I said just a minute ago, we're seeing a trickle. We are seeing the gold funds getting money, getting inflows, but it is not anywhere near the kind of inflows that we used to see between 2010, 11, for example, when the money was just coming in like a flood. So yeah. But given all of the programs that the various levels of government, as much as the federal in the United States and here in Canada and the province and Europe and France and all that, when you look at the amount of money that they are planning to print, literally, I think that you see there's definitely a heightened consciousness of what gold can do in this kind of environment. And between now and the fall, I think you're gonna see larger inflow in the funds, and that's when the funds, they can buy so much, Agnico Eagle and Newmont, but at some point they got to start to buy the medium size and the lower and the juniors, and that's when you start to see these inflow coming in.
No, makes sense. And Pierre, you've been on our show before making the case for, $20,000 gold, not in a given year, but over a certain time frame. Given what's now happened in our world, given the economic conditions, given quantitative easing to infinity right now, have your time frames changed?
Well, I'm still looking at 2 to 5 years for the peak in the Dow Gold ratio. And that's sort of my mantra. As you know, I've talked about the Dow Gold ratio for as long as probably you've known me. I actually sort of created the ratio while I was writing my Franco Nevada annual report in 1999. That's when it first appeared. And the point that I made was that at the peak of the credit bubble and everything else, the Dow Gold ratio goes down to 1 to 1. And in 1980, the Dow was $800, and gold was $800. That was end of January 1980, and the same in 1934. And so today we're at about 17 to 1, coming down from 22 to 1 just even a few months ago.
I was going to say it's the lowest level. It's now at the lowest level since 2016, the Dow Gold ratio.
Well, that's correct. The ratio peaked in 2011 at about 7 to 1, and then it backed up all the way to 22 to 1. And we saw the same thing back in the 1970s. We saw the same backing up, if you want, like the Dow Gold ratio went all the way down to 6 to 1. It backed up to about 12. And then in 1976, and then from there it went on to 1 to 1 over a 4-year period. So when I look at where we are today, the money creation, it will take time to get into people's hands. I look at supply chain disruption. I think we're looking at a 2 to 5 year period, and I do believe that we will see, if it's not 1-to-1, it will be very close to 1-to-1. I just don't know whether the Dow will still be 23,000 or it will be 16,000. And even if it's 2-to-1, all I'm trying to point out here is that the gold price will be materially higher than what it is today.
So would you would be accumulating gold at these prices here, Pierre? It's still a buy for you?
100%. I mean, why do you think, for example, I just put, like another 8 million into Orla, and then I'm buying other, companies. I think that we are in the early stage. Even though the gold bullion itself has been in a bull market since January 2016. Right. So you can say, okay, we're already 4 years in a bull market, but the gold price has went from $1,050 to $1,600. If you think it's going to go to 5,000 or 10,000, it's the equities have such a long way to go to catch up. They're going to be multiples of where they are today. So 100%, yes.
Yeah, Pierre, would you be looking at, outside of the metals, would you be buying the U.S. equities that are just, down in the dumps right now, like aviation stocks or cruise lines? Would you be looking at that?
That's an interesting question. The day the Dow went down 30%, I bought some, bank stock, and I bought some transportation stock and whatnot. And then they went back up about 10-12%, and I sold them all. And I'm still, from that perspective, I'm rather sitting on cash. I don't think that all the bad news is out yet. I think that you're going to see tens of thousands of bankruptcy in the small, medium enterprise. I think you're going to see some very large bankruptcies, not only in the oil business, in the oil patch, but in the transportation industry. The government can't save everybody and everyone. And I don't think that that's been recognized yet. People are still of the belief that this is just a bad dream and it's going to go away in a couple of months and then life will go back to normal. I don't think so. I think that we're destroying too much of the fabric of a country when you're destroying the small, the mom and pop and that are going to go bankrupt because, all of a sudden the customers vanish for 2 months and they live hand to mouth. And that's going to take time to come back. So my sense is that it's too early to really get back in there. But, what do I know?
And that's a really good point, Pierre. Who knows if life will ever go back to normal of what we have, how we knew it, right? Businesses have been forced to revolutionize overnight, basically.
Events like these always precipitate changes that become permanent. And so we look at video technology today, and you can see how much it has in a space of a few weeks. You just look at schooling, here in Canada anyway. My daughter's school, the university, which I sit on the board, we just went online with literally hundreds and hundreds of courses. The kids take on to it like fish to water. And so then you have to question yourself, why do you need all this infrastructure? Can you do more? Yeah, the kids need to be together. They love to have their buddies and friends and whatnot. And absolutely. But you have to do it all. And, and then when you look at other aspect of technology, how it permeates our lives and how it's going to change things. And when we talk about supply chain disruption, I think we realize now how much we depend on China for everything. And people are saying, well, maybe we should onshore some of that. And the just on time inventory theory, we're just going to wait until, the day before we need something. Well, now we realize it's broken. It won't work in any. And so all of that will be changing dramatically our lives, I believe, over the next year or two.
Absolutely. Pierre Lassonde, I really appreciate your insights. I'm sure our viewers as well. Thank you for taking time. I know you've been very busy in board meetings and whatnot nonstop. Thank you so much for speaking with me.
Always a pleasure, Daniela. Thank you so much.
Thank you. And thank you for watching. We'll have much more amazing content for you coming your way. Stay tuned to Kiko.com.